evening, ladies and gentlemen. Nice to see you here live in Dubai and some people online. My name is Bas Kooijman and I'm going to take you guys to a short presentation and hopefully tickle your brain a little bit with different charting that you have seen from our other speakers today. So you have seen a lot of charts and some people might know Renko charting. It's a different way of actually showing trading data on the screen. So we are going to go over that. Now this is a very short summary for tonight. The topic is trading with Renko is timeless, and I would like to discuss the timeless strategies with you. My name is Bas Kooijman. As I said, I work for DHF Capital. We are a hedge fund in Luxembourg and a securitization firm for bigger clients to make financial product, especially for what they need. So we are having a multi-asset strategy. I'm going to mostly speak about Forex because this is my 8-9 years experience. But we are also trading in gold, we are trading in equities, we are trading in stocks. So this way we have a multi-asset strategy itself. And as I said, we're doing that for about 8 years now. And this strategy is actually quite new. I've been working on this with a group of 10-20 people since November. To change their idea of trading and to change your idea of maybe investing. We're going to talk. It does work. It does work. I will show you more, but it's mostly for you to find out on the road. Yeah. So we're going to talk about time, letting time go, why Renko charts are so interesting to at least talk about, some tools and examples that we made, time frames, and a bit of a summary. So what's the definition of time? So this is the official definition of time, where it's the progression of events from past to the present to the future. That's the definition of time. But when something is not changing anymore, it's timeless. Now, especially, we just spoke with some colleagues, we are always working so much on how much did you trade today? What did you make this week? Or if we are investing, we want a monthly statement because we want to know between 1 February and 28 February, what did I make? But what if 27 February there was a minus 4% in your portfolio and you get that PDF from your bank or from your investment manager and you get all angry, while 3 days later, maybe 2 or 3 of March, your portfolio is 6% up, but you don't see that step in the middle because you only look at time. So for traders, this can be very difficult. When we work with a lot of traders and hedge funds, it can be very difficult to say, like, close all your trades on Friday, close all your trades on the month. That's never the trader's decision. It's the hedge fund manager or the client's decision that they want to have a statement based off time. So we thought about, why don't we just forget time? We go back to GTA 2 for the younger people that were playing games. We had 2D first. You looked from the top in a video game. Then we got 3D. And 4D is time. The fourth dimension is time. So why would we not stop working in a certain period of time? I understand that there needs to be a certain bracket, but let's at least stop with the shorter brackets. So that is kind of our goal. And now, why are Renko charts so interesting? So what you guys see here is a chart, a bit of the same idea. This is euro dollar. And for example, with the other speakers, we have seen charts. But there was always a line on the bottom that I, for good reason, filtered out. So mostly my slides are cutted. It's on purpose because here we have dates and we have time. Now, to give you guys an idea, I've put the years of the euro-dollar chart in here. Now you see that the years are not equal. So you have a certain amount of candlesticks in 2017. You have a little bit more in 2018. You only have a few in 2019, more in 20, a little bit less in 21 and in 22. So what does this chart do? Is that every green or red block is a certain amount of market movement. In this case, it's 100 pips. So when the market moves 100 pips up, it creates a green block. And when the market moves 100 pips down, it creates a red block. So that means that in a row, for example here, 2021, we had 1, 2, 3, 4, 5, 6, 7, 8, 9 red blocks in a row, which means that the price dropped by 900 pips. But in how long? this chart will never tell you. It's literally just that I put the dotted lines for you to understand what was the end of the year and what was the start of the year. Now, I do understand you want to measure in some brackets. So for example, you can say 2017 opened here and closed higher. It's good to know. 2018, we dropped. 19, we dropped. 20, we went up. 21, we went down, etc. So this is still a certain measurement of time, but the point is that this trader who, for example, chose to go short in 2021, maybe it was at the beginning of the year, maybe it was at the end of the year, we don't know that, but when he said the markets here are high, I'm going to decide to sell, he didn't know yet where he went out. So he might went out at the end of the year, he also might have stayed in all the way down towards where he says, okay, this is my exit point. So this strategy has a couple of different entry points and exit points. You can trade Renko just by default, where you say, okay, every green block is a start to buy, every red block is a start to sell. That doesn't work. So I will give you that answer. That doesn't matter on what sizes or settings you use. If you will try to take every trade, you will sell, you will lose, you will buy, you will lose, etc. It will be too hard. So it's good to combine it with other strategies. It's good to combine with any other indicator that you know. But the interesting thing for technical analysts, we have maybe 200 or 300 common known indicators and thousands of unknown indicators made by different people like me. So the point is, like, even all the default indicators that you know, stochastic, CCI, Bollinger Bands, like the famous one, moving average. Moving average might be the easiest explanation. We use a moving average 50. But what is the 50 standing for? 50 times time. So you put it on a 1 hour chart, it will be 50-hour average. You put it on a daily chart, it will be 50 days. Here, what would it be? 50 times your block size. So in this case, the average of the last 50 blocks of 500 pips of market movement. So your indicator is still an average, but it's not an average based on time. It's an average purely based on price action. So this is where people that are saying, oh, technical analyst is different than price action, this combines the two again, which I think is a very interesting topic. So this is, for example, a chart for 5 years. Now, a little bit back to the development timeline, we actually started to recognize the timelessness in Renko charts and how relaxed it can be for traders, not to say you have to go out at a certain time, just go out when your trend is finished. Most traders are choosing trends. Some people are trading counter trends, which is more a short-term strategy because they're on a very low time frame. It's a short-term trend, but we would see that as counter trend trading. So if we have a clear price action and the strategy has still useful indicators, we can go with the trend. Now, block size will make it or break it, because you can put 100 pips and you will see you will have just a few trades per year. But you can also put it very short and you will be clicking all day like a scalping trader that has hurt his finger at the end of the day because he buys and sells, etc. So you have short-term, middle and long-term strategy based on the block size, on how big do you want to make that data block to go up or to go down. And when does it reverse? Because it reverses the moment that the market goes twice the other side. Because, for example, we are here. To create a green block, you first need to go up the red block itself for 100 pips. And then you need to make under 100 pips on top of it to create the first green block. So 200 pips in this case is the reverse size. Try to keep it as easy as possible, but for some people it might be new. Like I know some people for it's completely new because they're more on the investment side, and you guys are nodding that you guys probably on the trading side. So it's really good to have both people in the same discussion. Now, trading every Renko trend, as I said, that is a good try. it's really good to practice a strategy when you are saying, I'm just going to buy every opportunity and I'm going to sell every opportunity and I'm going to learn from that. So you don't do that on a real account, you do that on demo accounts or on a comfortable, small real account. But you're just going to try, I get long-term trends, short-term trends, pullbacks, I will try everything. It's a really good check. And then we have made extra indicators where we say, like, okay, if it's an uptrend, we are only going to take every buy opportunity. And we skip the sell opportunities because they're probably not going to be big enough to actually make money. And then the opposite, when the trend goes down, we're going to sell at every sell opportunity, but don't try to take the more smaller pullbacks in the buy side. So, and then you can expand it. And this is kind of interesting, that whatever indicator you have made or whatever indicator that's publicly available will work on Renko, but just in a total different way. I've seen Bollinger Bands not where the price is in the middle of the Bollinger Bands, but the Bollinger Bands were kind of like floating a little bit away, a few centimeters away from the chart, as kind of an Ichimoku cloud would do on a normal chart. But very beautiful, smooth lines. So it's just the indicators that you already know. It's just worth to try, click on Renko charts on TradingView and just see whatever you already used, how that would act and react to your charts when you change the chart size. So it's very interesting. Now, how does that, for example, work? This is trading with the trend. So you see a red line here with the yellow confirmation line under it. As long as the red line is red, we are only selling. When the lines are switching, that one will become green. And here, for example, I zoomed in on only 2022, but I took still the 100 pips. This is still the 100 pip block size. Yeah. So basically, we started to sell here, and it went up. Now the question is, where do you start? So we are now starting with a stop loss of 3 blocks. So unless we are getting 2 blocks in the different direction, we would stay in the trade. So for example, here we start selling, we are not getting stopped out, we are getting another sell signal, we stay in, we stay in, we stay in, and here we have the option to get out. We'll talk about some stop losses and trailing stops later, but basically the idea is you sell, it goes down, you stop selling. You sell, it goes down, you stop selling. You wait till you get a new sell signal. When it will come, you will not know. So you will be struggling with your life that you have no time while everybody else expects that you have a calendar. Because if I would technically get an alert right now, I don't get many, but I would like to take action on that alert. So even if I choose to only have a few trades a day, when I get the one, I want to take it. So you can maybe enjoy more family time, you can enjoy more other things in life. But when the alert comes, that's your moment to still act. So that's very interesting, because if you be way later, this can be 10 minutes, can also be 3 months. So that is a very interesting part. Now here you see on this 100 pips per block, very long-term strategy, very high block size. We only have 1, 2, 3, 4, 5, 6, 7, 8 sell opportunities in the year on this pair. So that is interesting. But now if we go to a lower block size, this is 20 pips per block, you see, I'm not going to count them, how much sell opportunities you had in the same year on only one currency pair. Now, we have about 21, 22 majors. Then you have gold, silver. You can use this on all kinds of also stocks and other financial instruments. So here you see you have a lot more moments where you sell and you stay in. Now, every little red block is based for 20 pips. So you have way more activity, but still, if you would count them, the amount of sells in a year on one pair is still less than 2 or 3 a week. So it's a more relaxed way of trading, that when you get the alert, you act. But when you don't get one for 3 days, there's literally just nothing to do for a moment, because the days don't count anymore. Now, we made a tool to calculate what the right block size would be to make it a little bit easier. So you can do your block sizes automatically with ATR, but you can't put alerts when you are going for automatic. When you go for alerts, you can't go for the ATR automatic block size. You need to put traditional fixed block size. So what we did is we have actually two strategies that both work. One is a bit more short term. My pointer is not showing. The first one is the ATR 21. So it's 21 times the hour. So it's basically looking to around the last trading day. With a bit of not so active market in the night, we came to 21 hours. The second option is to take 15 days, but to take the 15 days divided by 5. So 20% of the last 15 days of data. It's a bit of a medium-term strategy. So for example, this screenshot's maybe from somewhere last week. You see a couple of pairs that are on 15 pips average, 14, 16, 15. So the Asia pairs, they are currently about the block size 15. It's not so much. That means that you will get maybe more alerts, but they are less valuable. Because what you're gonna make is maybe 5 blocks, maybe 10 blocks, times the block size that you started your trade with. Now, the euro pairs are a little bit higher, 25, 27. The pound is about 25, 30, even 35 on GBP NZD. And this is how you see every pair has a certain volatility, an average true range calculation. And based on that, you can see how big your block size should be for your current alert. I personally change this only once a month. So once a month, I see what is the block size for kind of that month. And I change my alerts on TradingView to the setting that it has to be. And I just let them tell me when I have to change my block sizes again a month later.
How do you change the block size? Sorry. On what basis do you change the block size?
What percentage?
On what basis do you change the block size?
You change the block size based on ATR 21 short term or 15 days divided by 5. It's average true range. So it's the average true range on how much that pair is actually moving, which basically tells you how volatile it is, and that will tell you what the right block size is. Because if it's too big, you get no alerts. If it's too small, you get too many alerts.
Just one question.
Yes.
The previous slide.
Yes.
You have multiple shorting positions here.
Yes.
You were able to short, sell. When you came to know that yes, this is the right point to enter.
Yes.
That is how will I want to know that when exactly I need to enter?
So the sell moment is the moment that the market will change into the position that it starts to go down, which means 2 times your block size after it was a buying market. But you skip all the little buys because you see that the green blocks, they're smaller, let's say, ranges. And there's a harder chance that you go in and just hit your stop loss. Or you go in and it's not big enough and the market turns around again. So we take a macro view. Here you see it changes beginning of 2022. It's changing from an old buying trend in 21. We change into a downward trend. We keep selling all the way till here, which is a bit, you see, like October, bit November. End of November when the market starts to recover. And indeed, we started strong like the last speaker said. So this is...
Measuring the block size is the right way to see when exactly...
Yes. And then there's a period that you do absolutely nothing because you're transitioning from a macro downtrend to a macro uptrend. We can talk about this for hours. I don't think that we do have the time, but I'm still here after the event. So time frames. This is very important. This is where I speak about with my wife about. This is not trading anymore. This is how much times do you want to be disturbed? Because when the market starts to move, there will start to be tentative blocks. For people who started to work with Renko, you will see tentative blocks. So the market starts to go up, but it's not closed yet because the market can still turn around. So for technical people, it would say it's repainting. It's repainting till the end of your time frame. And that time frame can be every hour. That means every hour you can get an alert, every hour the market can move, you need to be able to enter, you need to be able to exit. Other option is, for example, put it on the 4-hour time frame, maybe a time frame that swing traders are using more often, that they are staying a little bit longer in the trade. That means 6 times a day, so from trading time midnight, every 4 hours a time frame closes. And that's the moment you get an alert or not, because that's when the tentative blocks are being fixed on the chart. I work with 6 hours, for example. And yes, that exists. Most people know 4 and then they know daily kind of, or I don't know what is in between. But you can actually make the modification yourself. You can put 5.5 hours if you want on TradingView, for example. So 6 hours means for me that here in Dubai at 8 o'clock in the morning, I get my first alerts. So I wake up, family still sleeping, I get my alerts. Then 6 hours later, I get a new alert. 6 hours later, I get my next alert, and then at 2 o'clock at night, that one I skip because I'm hopefully sleeping. So this works for me 3 times a day. I'm awake at 6 o'clock, at 12 o'clock, and at 6 p.m. I'm awake. If I'm traveling to other country, mostly this still works. Wake up early, have a lunch update, and the end of the day. Some people like 8 hours. Every 8 hours, the market gives you an update. Every 12 hours, the market gives you an update, or even just once a day at midnight. So then you can or stay awake for it, or you can say, okay, I will see it in the morning. The higher your block size, the higher your time frame can be as well. It's a match with each other. The longer you want to stay in the trade, the less you have to check it. If you go very short block size, but you go 6-hour updates, you will be always too late to enter. That's the sad part of it. So you need to choose short-term trading. Okay, a lot of updates, a little bit longer term, less updates, less alerts. It's very, very nice because now I exactly know when I can get an alert. So life still goes around those 3 times a day for me. Now this is a very nice quote. I always try to put one quote. The timeless in you is aware of life's timelessness. You know what it knows that yesterday's is but today's memory, and tomorrow is today's dream, because we are only at today. It's a good one to let sink in. Okay, so let time go. Focus on more important things in life. This also means that it's a very good strategy for people who are still working very hard in a job and try to do trading on the side, because you can exactly see when you want your morning, your lunch break, and tell your boss, I have to trade right now again. So you can put this 6-hour block, for example. So it's really good. You can choose to trade more part-time. You can work with your chosen time frame. Most important is you need to try out what works for you. So that's going to be very important. And you can still analyze your results maybe monthly or yearly, but I would try to convince people to let go of the daily results and the weekly result, and I have to close everything on Friday. You're in your trend, and most people use trailing stops. They use like that the trailing stop works with you. So when you're in profit, you can't lose anymore. Why don't you leave it open on Friday? It probably will still be in the same trend on Monday. So let time go a bit, relax more as a trader, and look at Renko to see if that fits your life. Thank you guys so much.